Well, what's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Dakota. Today is Tuesday, June 18th, 2024, and this is how we trade SPY today. But before we go there, folks, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is just about every day and sometimes on the weekend. Now, folks, tomorrow there will be no video. Tomorrow we are celebrating Juneteenth. So as a result, the markets are not open. If the markets are not open, there's nothing to trade. If there's nothing to trade, there is no analysis before the market, and there is no recap after the market closed because, again, folks, markets close tomorrow, so we won't be doing anything. So if you notice, if you're looking at my chart right now, folks, the first thing that you're going to notice is, guess what? I don't have any lines on here. I don't have pre-market high. I don't have pre-market low. I'm not looking at 30-minute zones. And I did that very, very specifically for a reason today. So we could just kind of use this 920 and see what would happen. We're going to look at all of the different ways that we can play the 920 without using major lines of support and resistance. And again, so folks, let's face it. The 920 will generate every buy and sell signal that we need to see. Now, do those major areas help us? Absolutely, positively. But if you played nothing but 920 crosses, you would do just fine. And again, you don't want to trade all day long. The purpose or the goal of becoming a full-time trader is not just sitting in front of your screen for 6.5 hours. The market is open for 6.5 hours. Every single day, folks, the goal is to not do that. My preference is to trade the first hour and a half, 2 hours, see if there's some good plays, some really good setups during that time, and then come back for power hour. Maybe there's a setup for you during that last hour. Sometimes there is, sometimes there isn't. You know how we like that 350 candle. Sometimes the setup is there, sometimes it's not. About 3 out of 5 days, on average, we get a really, really nice setup late in the day. But here we go, folks. So right out of the gun, early, folks, we had a cross. 15 minutes before open. So my rule is, generally speaking, I'm not going to take anything before. I'm looking for fresh crosses only. Or let's say I've got some lines up here, pre-market high, something like that. I am definitely going to wait until we start breaching levels. But again, my preference is to take that fresh cross. Why? Well, because generally speaking, you get the best plays out of fresh crosses, notwithstanding major levels. And again, folks, no major levels to speak of, or nothing on the chart to look at. So but if you did take this right out of the gate, I mean, this first candle, really decent volume. I think we had 244,000, which is, it's light for a first candle. We're looking for 6, 7, 800,000 on that first candle. When you get that kind of a move on that first, or that kind of volume on that first candle, folks, generally speaking, the day, and again, please go back and look at the days, look at that opening candle to see what it does volume-wise. What you will find on the days that we had really, really strong volume, a heck of a lot more than 200,000 or 300,000, that the day was much, much, much better. We had much better plays. We had much better plays throughout the day than if you had kind of a relatively low volume. And you can tell inside that first 20 seconds or so whether it's going to be a decent volume candle or not. I knew 15 seconds into this candle, I was saying, okay, we got 75, 80,000 shares in that first 30 seconds or 25 seconds that I said, folks, it's just not a whole lot of volume. And folks, trust me, we need 3 things. We need volume, we need volatility, and we need range. If we don't have all 3 of those things, it's generally not going to be a good trading day. But enough about that. Let's see how these trades play out. Now, if you took this first trade, and again, you're pushing up, you're not waiting for that first cross. Now, we did have the POC was right around in here. You could have taken it, you're above your 9, you're above your 20, you're above your VWAP, and you're above the POC. And what would you use as your support? Or what would you use to say, okay, if it breaches this back to the downside, I'm going to take myself out of the play? Well, you can use the candle that got you in. It's called an ignition candle. So again, the ignition candle is the same candle that gets you in, gets you out. If it's good enough to get you in, it's bad enough to take you out. Or you can use a major level, again, like POC. But again, this was a really, really nice run to the upside. I don't even have any pivot points up here. I'm not showing any kind of lines whatsoever. Now, back to the downside. What do we have here? If you are looking to play this aggressively, now, how do we take our trade off the table? Well, there's multiple ways to do it. You can, if you have a specific target in mind, maybe it's a pivot point, maybe it's a 30-minute zone up here. But whatever it is, if you have a specific target in mind, take your play off the table when your target is reached. That's a great way of doing it. One way to play the 920 strategy is, again, if you're going to play that fresh cross, multiple ways to play it, but that first red candle that closes when you breach the 9 or against your position, to the downside when you're in calls, that says, you know what, this play's over. This play's over. That is the most conservative way. And you can, it looks like it's aggressive, but if you play it this way every time, folks, you will do very, very well. You have to know your numbers. And I did a video about this not too long ago, a couple of months ago, on expected value. You have to know what your expected value is every time you get across to the upside. You have to know what your expected value is every time you get across to the downside. If you don't know that, folks, you are gambling. We don't like to gamble, folks. This is not, we want to act as though we are the casino. Stack the probabilities in your favor. Do the same thing over and over and over again. Again, you should know what the expected value is every time you get across to the upside, every time you get across to the downside. All right, let's talk this next cross to the downside. Okay, well, you can take a fishtail play in here, but if you're in calls, you're probably just closing out the calls in here. Now, you had a couple of different plays in here. What we're generally looking for on a play like this, folks, is we're looking to breach VWAP back to the downside. So what are you thinking? Okay, well, you got a breach of the VWAP back to the downside. Maybe it'll push down. Maybe it will. No earthly way of knowing. But where are you stopping on this play? Again, you could use a breach back to the upside of the 9. So you got 86 down to 50. You got 32 cents. That's a pretty big stop, folks. If you're using a 32-cent stop, that's probably too much. So you can use that. You can use, again, that first red stick that goes against your position. But again, as you will see throughout a lot of the day, folks, it's dirty. This is a dirty, dirty chart. Now, again, back to the downside again, we had this. So we had this cross here. We had this cross here. We had this third cross that made a little bit right in here. But as you can see, even moving into this cross, at this point, folks, we're an hour into the day. I'm crossing my arms because I had taken a couple of trades in here and got it handed to me a couple of different times. I'm thinking, okay, I'm jumping this trade a little bit. We're going to push down. We're going to push down. We've got levels that we're looking for. We had already taken out pre-market high. I knew that. Again, 547.75. I knew that we had taken out pre-market high. So once we do that, I like to play it back to the downside. Take that rejection out of that area, play it back down. Had a couple of losses right in here. So what? What did I do? Third play, back to the downside, I took this trade. Now, what was I looking at here? I was looking at pre-market low. So again, I knew that I had pre-market low down here at about 546.60. So 546.60. We start moving down again. Nice cross back to the downside right in here. Cross to the downside, pushing down, pushing down. It was a really, really, really nice trade. And again, I was looking at this candle right here when what I should have been looking at. And again, folks, I had a pivot point right at this level. So 546.74. I had a pivot point, but I wasn't paying any attention to it, folks. So I turned a really, really nice winning trade into a trade where, quite frankly, I got beat up again. And that's all my fault. But it's one of those situations where one of two things is going to happen. Either it's going to hit my target, which it did not do, or I'm going to stop out going in the opposite direction. Now, here's the problem with not taking the trade off at this particular pivot point. And again, some days it's chicken, some days it's feathers, folks. And today was just one of those days. The result of not taking my trade off at this level, at this pivot point, when we had such horrible price action, and folks, trust me, this is not good price action. The result of me holding on to this trade a lot longer than I should have was, guess what? We had the cleanest move, again, cross to the upside, again, out of this pivot point right here at 74, which, had I had that on my chart, hey, you know what? I probably would have taken it off again because it was really, really bad price action. And then I would have been able to set myself up to the upside. But you know what? I didn't because I wait for the close way in here. And again, I had a decent entry, but pullbacks really hurt my position and turned it into a marginally losing trade. So I'm 0 for 3 at this point, folks, and got punched in the nose just a couple of times. Went to lunch in here and just kind of shook it off, and I came back and I saw, you know what? Yeah, we're making some higher highs over here, kind of using this VWAP. But I said, I want to wait and see if I can get some sort of a decent setup, some volume. And then the volume started pouring in. We had this cross to the downside. Now we had 28 right here, 548.28, which was a level that we were looking at. I knew this was a level because this was a supply zone left over from yesterday. So at 548.28, 30-minute supply zone. At that level, that's where we came down. And I'm going to go ahead and show you this on the 30-minute chart. It is right at this level, 28. There we go. 548.28. Again, this is a nice rejection level off of yesterday's trading. So let me show that right here. So get that 530.28, somewhere right around in here, folks. A good rejection level. That's a 5-minute. Let me go back to that 30-minute. Where did you go? Oh, there you are. That was a 5-minute. Okay. So the rejection level again, 28 right in here, folks. There it is. There's that rejection level. I was looking for a rejection right in there. And, but I thought, you know what? I don't really trust price action. I should have, we got another all-time high, by the way. It was at 14. We ran up to 64, 65, something like that. And, again, I was waiting for a little volume to pour in back to the downside. I could have taken it. But again, I got punched in the nose a few times today. And I hate to say I was skittish. I hate that because, as soon as you get punched in the nose 3 or 4 times in a row. And I said this to the group. I said, here's what happened, guys. You take a few losses in a row, and then what happens is you hesitate. And when you hesitate, that's when you get those really good plays. So I saw this building up. I saw a little bit of volume pouring in. And on this candle right here, and we had some news. So 1402, 1401, the volume started pouring in. I said, guys, we got to cross to the downside. We're making, we're busting through levels over here. I'm taking puts. So I took puts. I was in this trade for about a minute and a half. I marketed it out for a really, really, really nice play. Again, we had a lot of volume. We just need to push it back to the downside. My stop on this particular play, this would have been a 1 candle. Okay. This would have been a single candle. So an ignition candle. Had this gone against me, I would have closed it out. So we have 13 down to, it's a 35-cent candle. So it would have bloodied my nose just a little bit further. Now, this play right here, it was a really, really nice play to the downside. But you know what? It did not make up for the losses that I had taken earlier in the day. Now, I can tell you this. Had I closed out this trade at this pivot point, and let's not even worry about this trade right here. Let's say I close it out right in here. I went to lunch because I went to lunch right after I closed out this losing trade, which was a nice winning trade. But had I closed it out at this pivot point, and then taken this to the upside, even if I wouldn't have taken this up to the upside and then caught this trade right in here, folks, it would have turned my red day into a really, really beautiful shade of green. But we deal with what is, not what we wish would happen, folks. So again, it was a red day, and it happens. I don't care. I don't care about individual trades. They mean absolutely nothing to me. You take 3 or 4 in a row, and you're trading a decent position size. You get beat up a little bit, folks. You just deal with it. There's no possible way in the world that you're going to have 100% green days. You are just not going to do it. It's not going to happen. Anybody who says that they have 100% green days, they are not telling the truth. It's just not based in reality, folks. Most of my days are winning days, folks. Most of my days are, but I have losing days sprinkled in there. That's just the reality. I have losing trades all the time. I don't care. I have losing days every now and again. And again, folks, I don't care. We are not reliant on a single trade or a trade-by-trade basis to make it as a trader, but rather a series of trades over time. That's what counts, folks. It's not the no. Don't get me wrong. We like to have those really, really nice trades where you hit a banger. You catch one of those plays and it just goes and it goes and it goes, or you catch one of those trending days like yesterday and it runs up $4 or $5 and you just sit back and you're watching higher time frames and because you've had previous things that happened in the past that you're busting levels of support to the upside, you're busting levels of resistance back to the downside. You just ride that sucker until it bucks you off. Those days are absolutely incredible, folks, but you know what? Those don't happen every day. Generally speaking, about 1 out of 5 days is a nice trending day. We don't know beforehand when those are going to be. I didn't think it was going to be yesterday, but you know what it was? It was a really, really nice day. But those are not the norm. Those are still, again, 1 in 5 days. It's like the 350 candle, 3 out of 5 days. You don't know where those are going to land, folks. I guess a lot of this message is when your edge presents itself, go ahead and put on the trade. If you've taken some losses, it happens. Don't get down on yourself. Just realize that, you know what? The market does what the market does. As retail traders, the only thing that we can do, folks, is ride the coattails of the big boys. That's it. We're not going to move the market. We're not dealing in penny stocks, folks, where retail can take over the stock and move it one way or another. That is not what we're doing. We're trading SPY. We're trading SPX. Some people are trading the Qs or NVIDIA or Apple or whatever the equity is, folks. We're not going to move the market. Now, there's an argument to be made that it only takes one person somewhere in the world to move the market. But you know what? We are not it. Retail's not it, folks. We're riding the coattails of the big boys. The big boys are making these moves. We're just jumping on. We're jumping on and taking our little piece. We can take millions of dollars out of the market every single day, folks. And you know what? We do not make a dent. We are absolutely nothing. So just execute, folks. Just execute. Now, after this, I'm thinking, okay, still red for the day again. It made it better, but it did not make it green. At this point, I thought, you know what? Maybe there's going to be a setup in Power Hour. Maybe there will be. Maybe there won't. But again, look at this bad price action that's coming into Power Hour, and we start Power Hour right in here. But folks, look at this. There's really nothing is setting up to be any kind of a decent move. And I told the guys in the group today, I said, listen, unless your edge presents itself on that 350 candle, and that 350 candle was right here, a nice green candle. Look at this. I mean, it's a really, really nice green candle. Had really nice volume that poured into this candle. And it was, let me see, we got 73 through 02. So you got a 28 cent candle. 28, 29 cent candle, somewhere right around in there. Good size candle. But what we didn't do, folks, is number one, we didn't get across to the upside. Number two, we didn't breach a major level to the upside. We had POC right in here. We didn't breach POC to the upside. Yes, we were above VWAP, but we didn't do anything from a major level standpoint to say, you know what? Based on that candle right there, that's a good spot to take an entry. It wasn't, folks. Today was just one of those days that some decent plays in here at times. There were some nice crossovers, no question about that. But one of our group members said it yesterday and he said it yesterday after the big run, beautiful run back to the upside. Our group member said, you know what, because of this run up today and the fact that the market is closed on Wednesday, there's going to be hell to pay in the market. And that's kind of what happened today, folks. It's always algo trading. Don't kid yourself. It's always algo trading. But the moves that were there today, decent moves, had a couple of good ones. Nothing sustained. After a big day like yesterday, just kind of count on, particularly since the market's closed tomorrow, kind of count on the fact that, you know what, don't really expect anything. Well, folks, that's about all I have for today. Again, this is the chart without any lines. I trade SPX, and when I'm looking at my SPX chart, I'm not looking at anything other than the 920. So out of the 920, I have VWAP and I have volume profile. Folks, that's all I'm looking at. I don't have lines of support and resistance up, and I don't for a very specific reason. Number one, I have a SPY chart on my other computer, so I'm always looking at that. But I just like the cleaner look of that at times. At other times, I'll just trade 100% off that SPY chart. So I just kind of go back and forth depending on what the chart looks like for the day. But that's how we did it today, folks. Now, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications and leave us a comment. We always appreciate the comments, folks. Tell me what we're doing good. Ask questions. Tell me tell me how we can make these videos better. How can we make these videos better to help more people? I mean, ultimately, that's what it's all about, folks. And don't forget to share. And again, folks, I'm always open to any kind of positive criticism, negative criticism. Again, if you see something that you believe I can be doing better, please, please, please let me know, and I will at least consider it, and I will respond back to you. But please be respectful about it. Now, if you are interested in live daily trading, folks, we do this every single day. And again, folks, some days are better than others. If you're interested in live daily trading and getting this entire experience where we talk about these trades 100%, folks, if you're interested in these in live daily trading, head on over to our live trading Discord. It's called Trading Decoded. And we are there every single day from 9 o'clock Eastern time. So obviously before 30 minutes before the market opens until the final bell. So 7 hours every single day, folks. We're talking about these plays. Why? Why do we get on early? We get on early so we can kind of give an analysis, talk about pre-market high, any catalyst, pre-market low, different zones we're looking at, kind of how we are looking to play SPY or SPX throughout the day. So we do that every single morning. It's an analysis, folks. So again, head on over there. Now, if you join, we're going to give you that first week for free. If it is something that is of benefit to you, stick around. If it's not, that is not a problem. Now, if you are interested in the 920 crossover strategy, head on over to 920trading.com. The entire strategy is there. Everything is there, folks, A to Z. And if you have any questions, again, feel free to reach out. You can send me an email. I will respond to every single one of the emails that I get. And I do every single day. I get emails every single day from folks that are just looking to get better or have questions specifically about the 920 crossover strategy. But check it out, folks. You don't need to spend thousands of dollars on a strategy that, quite frankly, is there if you're just willing to look for it and spend a little bit of time. But that's how she did it. That's how we did it today, folks. Again, nothing on the chart. It was kind of naked, other than 920 VWAP and volume profile. But hey, thank you for spending a little bit of your precious time, because, folks, let's face it, time is the most precious commodity that we have. Don't waste time. But thank you for spending a little bit of your time with us today. We greatly appreciate it. So have a great day off from the markets tomorrow, folks. It'll be a nice little day off for me. Nice midweek day off for me. So anyway, I hope everybody has a great rest of your evening, and we will see you in the markets.